Hello, everyone. Okay, sorry, I'm a little late. Okay, hello, everyone. Okay, good morning. Sorry, I'm late. Okay, so we continue with the discussion of the paper one. Okay, the paper one. This is where we left off the other day. Okay, so one of you is still joining. 1, 2, 3, 4, 5. Where's Wenjin? Wenwei? Where's Wenjin? Not coming. He has a test. Okay. Okay. Hello, Crystal. Good morning. Okay, so we continue. Sorry, I was a little late today. We look at this question. He texted me. Okay. So let's have a look. Yeah. Which amounts appear in the statement of financial position on 31st of January? Oh, you got confused with this question. Those ones rates are 100 a month. That means how much those one should pay for a year? 1200, right? So that's the should amount. Amount that those one should pay. Amount that those one should pay, right? He pays 6 months rates in advance on 1st January and July 1st each year. Okay, a few things you have to understand here. Pays in advance. That means pay earlier. Pay earlier. Okay. And 6 months rates. Every time he pays for 6 months worth of rate. Every time he pays for 6 months worth of rate. That means 600. Every time he pays for 600. Get the idea? Okay. Every time he pays for 600. So he pays 600 on this day, also pay 600 on this day. Okay, and then next sentence is about rents, right? Rent, a different thing here. So initially it talks about rate. And then talk about rent. We settle hold on, yeah. What is the year end? Okay, later I tell you what is the year end. Then next sentence it says, he also received six months rent of 150 a month in advance on the same date. That means it's the same thing with the rent. It's the same thing with the rent. Okay, and that means he received in advance also. Okay, he received in advance for this item. Okay, every time he receive rent, it's always 6 months rent, six months worth of rent. Risk is an expense here. Rent is an income here. Because it says receive, right? Okay, he says receive. And for rates, it is something that he pays. Okay, so one is income, another is expense. Okay, you have to understand what they're asking you first. Okay, first and foremost. And for this topic, accruals and prepayment, you have to keep looking for the 4 things, right? The opening balance, the closing balance, and the amount you should pay, amount that you have actually paid. Agree? Okay. And this kind of question is always better to be solved with the T account. Okay. And it's asking you what will appear in the SOFP on this day. You always prepare the SOFP at the year end. You always prepare the statement of financial position at the year end, just like you always prepare income statement at the year end. That means this is the year end. This is the year end. Okay, this is the year end. Meaning beginning of the year is February 1st of the previous year. Okay, and then January 1st next year is the year end. Okay, agree, yeah? This is the accounting period where this is the year end. This is the beginning of the year. Now they're asking you what amount appears on 31st January in the SOFP. They are asking you for this one, closing balance. They're asking you for the closing balance because it is the balance BD at the year end that appears in the SOFP. Remember, balance BD on the left means current assets, balance BD on the right means current liability. So if the balance BD is on the debit side, it's a current asset. If the balance BD is on the credit side, then it's a current liability. Okay, so we have to find this. We have to find this closing balance. Okay, how to find? Come up with the T account first. Come up with the T account first. One for rates. Okay, please do whatever I'm doing with together. Okay, and then another one is rent receive. Okay, so two accounts here. Two accounts here. What can we find? So we can find the amount Nusraf actually paid and received, right? Because we know the amount. So 600 pay on 1st January, right? And then July 1st also pay 600. So focus on the accounting period. Focus on the accounting period. So pay on July 1st and also pay on January 1st, agree? Okay, July 1st, then only January 1st. Okay, because this is our accounting period. Okay, now begin. You focus on the rates first. We finish off the rates first. So on July 1st, pay 600, right? Okay, 600. Just now I told you how we find the 600. Credit cash or credit bank, then debit here, 600, cash slash bank. Okay, this is amount actually paid. This amount we have actually paid. Okay, 600. And the date is, let me make clear here, July 1st. Okay, and then you make another payment on January 1st. So also 600, cash slash bank, January 1st. Okay, which is the January of next year. Okay. Okay. After that, you have to find out how much Nusram should pay during a year. How much Nusram should pay for risk during a year? 1,002, right? I have written here for you. 1,002. That's the amount to be used in the transferring process. It's a tricky question, okay? It's quite a tricky question. Income statement. This is transferring process. Okay, so far okay. Okay, you have to understand what I have written here in the rates account. Balance it, then you can get the answer. Hold on, yeah. Balance it. Let me try to see again. Balance it, then you get nothing, right? Okay. I'm aware we are lack of opening balance. Correct. We are lack of opening balance in this question. Let me erase this account. Let me try to think properly again. I draw another timeline for you. Let me draw another timeline for you. This is February 1st, beginning of the year. This is January 1st, January 31st, next year. Okay. So this is the accounting period. This is the accounting period. On July 1st, maybe somewhere here, okay, July 1st. On this day, he will pay for the rates for this period, 6 months. July, August, September, October, November, December. On July 1st, he pays for the rates during this period, okay, July 1st until December 31st. Because every time he pays for 6 months rates in advance. Okay, so Wen Hui, later I see whether yours is correct or not. Yeah. So this day pay 600. On another day, January 1st, he pays again, right? Pay 600 also. And the 600 paid is for January 1st all the way until June 30th. Okay, because every time he pays for 6 months rate and is in advance. That means when he pays, whenever he pays, he's paying for the following 6 months rates. Yeah, whenever he pays for the following 6 months rates. And just now I told you that this question is to find the closing balance, right? Closing balance. There's a quick way to do it. We don't have to do a T account here. You focus on how many months are there? How many months are there? That means focusing on how many months Nuswan has overpaid. Answer is 5 months, right? Because on January 1st, he pays for the following 6 months rate. And we are going to look at the year end to determine on that day of year end, Nuswan has overpaid for how many months? Answer is 5 months. So you have to find the 5 months amount, which is 500. Yeah, Wen Hui, you are correct. 5 months. That's why is 500 current assets, because for the rates is overpaid at the year end. At the year end, yeah, at the year end, it has been overpaid for 5 months. If you want to do the T account, this is how you do. But for this question, it's not necessary. If you want to do the T account, so rate, okay, at the beginning of every year, he will have 5 months, 5 months rates overpaid. So 500 balance, current asset should be current asset. 500. So this is the opening balance. And amount you have actually paid, cash bank, 600. Income statement, 1,002. Balance sheet. So it is 1,007 here, 1,007 here. And then here is 500. Balance CD, balance BD. Okay, at the beginning of every year, there's always an overpayment of 5 months. Okay, as you can see here, at the beginning of the current year, at the beginning of next year. Okay, so this is how you do the risk account, but for this question, it's not necessary. You just have to find out at the year end, Nuswan has overpaid for how many months? Overpaid for how many months? How we know the opening balance? Because it's the same as the closing balance. because it doesn't say otherwise, right? It doesn't say otherwise. Every time he pays for 6 months, 6 months rates on January 1st and July 1st. This is the accounting period, February 1st to January 31st. Okay, you have to focus on the year end. Focus on the year end. Focus on the year end. You see for how many months those one has overpaid. You have to draw the timeline to see clearly. You have to draw the timeline to see clearly. What I did here, I come out with the accounting period first, February 1st, January 31st, and then I've drawn on the timeline the payment dates, July 1st, pay on July 1st for the following 6 months rates, 600. On January 1st, pay for the following 6 months rates, 600, indicating that this is the 5 months overpayment. That's how I find the 5 months amount. Yeah, so when you have drawn the timeline, it would be more clear to you. When you have a lot of dates given, when you have a lot of dates given in the exam question, it's very helpful to have a timeline drawn. Okay, now after the rates, we look at rent. For rent, it's the same timeline, but it's an income that you receive. So again, you go find 5 months worth of rent. 150 times 5, you will get 750. This is an income. You over receive an income. So current liability. You over receive the income by 5 months as well. So the answer is B. Crystal, you have understood how I solved the question. It's about finding the closing balance here. See those one has overpaid for how many months at the year end. The rest of you, are you okay? It's not an easy question, I'm aware. Okay. So some students, they asked me about this question before. Okay, yeah, give you 10 seconds. If you still have anything to ask, then you ask, then we move on to the next question. Okay, so the keywords of the question, you have to focus on 6 months rate, okay, 6 months rent, and then the term in advance. Okay, have to understand all this term in advance, 6 months rent, 6 months rate. Okay, now we see also have to understand how to find the year end. The year end is 31st January. Okay, because you prepare SOFP at the year end. Okay, now next one, which is on the next page. Which entry appears in the insurance account to record the transfer to the income statement? It's asking you how do you do the transferring process here? How do you do the transferring process here? Okay, I have not read other parts of the question, but maybe it's helpful to have a T account. Otherwise, we just leave it here. Okay, insurance account shows an amount paid for the year 2000. This is the amount you have actually paid during the year. Credit, cash, or bank, debit, insurance. Therefore, 2000 appears here, cash bank appears here. And a prepayment at the end of the year, 400. So this is closing balance. This is closing balance because it says at the end of the year. Prepayment means you overpaid an expense is a current asset. When you have overpaid an expense, is a current asset, indicating that balance BD will be on the debit side. Balance BD will be on the debit side. So include this in the account. Closing balance, be careful, write the balance BD first. Move it up diagonally. Okay, that's the closing balance. Now, we have included amount you have actually paid. You have included the closing balance. Okay, is it okay not to have opening balance? Yes, it's actually okay. When you don't have opening balance given in the question, then no opening balance. Okay, what does having no opening balance mean? When you don't have opening balance, it means in the previous year, you have not overpaid, you have not underpaid for the insurance. You have not overpaid for the insurance, neither have you underpaid for the insurance. You have paid the exact amount that you should pay. Okay, last year. That's why you don't have opening balance in the current year. Okay, so that's why you don't have opening balance here. Because in the previous year, you have paid the exact amount that you should pay. Okay, so you have not overpaid, you have not underpaid. So no opening balance for this question. Now, the last figure is the transferring process, which is the area here. How to find? Easy. Debit side is straighter, right? 2000 right here, copy to the other side, 2000, 2000 minus 400, you will get 1006. Answer is either A or C. Okay, everyone, you tell me your choice, A or C. Okay, I wait for you. You tell me it's A or C. Okay, good. Answer is A. Because it's asking you which entry appears in insurance account, right? So it's a credit entry here. Okay, this is a credit entry. So answer is A. Okay, so that's how you solve it. Okay, we see the next one. You see, not always they would ask you to do the account, right? Income or expense account. Sometimes they give it to you, they ask you to interpret, they ask you to give the meanings. So they're asking you which one is correct. Okay, so let's try to understand everything here first. In the account, the following account appear in Andrew's ledger. So this is an advertising account. This is the opening balance. This is the closing balance. This is the amount actually paid. This is the amount Andrew should pay during the year. Okay, this is also closing balance. Okay, let's see. Andrew earned 2,800 from advertising during the year. What do you think? Is this an income or an expense here? It's an expense, right? Advertising is an expense here because if you look at this, credit bank, debit here. Credit bank and then debit here, which is a payment. Therefore, A is wrong. Okay, because it's something that you are paying here. Okay, so A is wrong, yeah. Look at the D, look at the donkey. Option D, Andrew paid 2008 for advertising during the year. Is that correct? No, because Andrew paid. Paid means amount you have actually paid, past tense here, right? So amount Andrew has actually paid is actually to 4,000. It's actually 4,000. Okay, he has paid 4,000 during the year in total. So wrong, answer is not D. Okay, look at B. Andrew had prepaid. Prepaid means overpaid. Okay, prepaid means overpaid for advertising on 1st May 2015. Okay, look carefully. This date is what? What day is this? This is here. Okay, 700 is a current asset, right? Because it's on the debit side. How can an expense become a current asset when you have overpaid for it? So I think answer is B. Okay, so to confirm that B is the answer, we look at C again. Last one. On 1st May 2015, okay, which is talking about the same date. Andrew owe 700 for advertising. No, wrong. Owe means you owe the expense, and it should be a current liability, which should appear on the credit side instead. But it's on the debit side here, right? The 700. Therefore, C is also wrong. Answer is B. Answer is boy. Okay, so 10 seconds again, and then I move on to the next question. Okay, this is not that difficult here. Okay, let's see the next question. Which amount for insurance appeared in SOFP on 31st January 2015? Okay, does this question look familiar? Yes, right. It's the first question we discussed today. It's similar to the first question we discussed today. It's asking you how much appear in SOFP. Agree? Okay. So what is the year end in this question? This one. This is the year end. How I know? Because we prepare SOFP at the year end. Okay, so that's the year end. So to help you out better, so that you can see clearly, always draw the timeline. February 1st, 2014 until 31st January 2015. Okay. So they're asking for the closing balance here as well. It's asking you for the closing balance as well. But this time they ask you to just find the amount. Let's see. Izzat paid 750 on 1st October 2014. So they are telling you on this day, okay, somewhere here, okay, October 1st, 2014, he paid 750 for 15 months insurance. For 15 months insurance. Okay. So it's telling you that the 750 is for 15 months long of insurance. And the insurance is for this period. The insurance starts from October 1st and then 15 months later. So what is the date? 15 months later. So calculate October, November, December, 12 months more, right? So December 31st, 2015. Okay, 15 months later, it is December 31st, 2015. So my point is the insurance has been overpaid. The insurance has been overpaid. How do I know it's overpaid? Again, to see whether something has been overpaid or underpaid, you focus on the year end. You focus on the year end. So at the year end, how much have you overpaid here? Answer is 11 months. How do I find 11 months? Because after the year end, there are still 11 months to go until this day, right? Okay, there are still 11 months to go until 31st December 2015. No, it's not 12 months because your year end is January 31st. 31st. So don't include January, right? Don't include January because the year end is January 31st. So find 11 months amount. Take 750 times 11 over 15. Why 11 over 15? Because 750 is 15 months long of insurance. You have to find 11 months amount, the overpayment amount. At the year end, 11 months has been overpaid. If you don't get how I have gotten the 11 months, just let me know. The 11 months is important to get. $550. Answer is D. Okay, let me repeat. Yeah. This question, you have to first know what is the year end. Okay, and you can get it from here. So with the year end, you know the accounting period is from 1st February 2014 until January 31st, 2015. Okay. After that, I look at the first sentence of the question, and then I found that Izzat paid $750, 15 months insurance on 1st October 2014. So meaning the insurance payment is for October 1st all the way until December 31st, 2015. Okay, and then you have to determine whether Izzat has overpaid or underpaid. Focus on the year end. Focus on the year end. And also focus on the last day. Also focus on the payment period. Okay, you have paid all the way until December 31st, 2015. So at the year end, you have overpaid for 11 months. That's how I determine. Okay, then find 11 months amount. Oh, one of you tell me 750 here is the total 15 months. Yeah, correct. 750 is for 15 months of insurance. Okay, not 750 per month. All paid for 11 months. All paid for 11 months. This 750 is for 15 months of insurance, I know. Then you have to find 11 months amount. You have to find 11 months amount. So I divide by 15 times 11. So I get 550. It's not overpayment for 15 months. The overpayment period is no, okay. You have misunderstood. Okay, so the overpayment period is from 31st January all the way until December 31st, 2015. Okay, so everyone have to be very good with looking at dates. Okay, in accounting, these are very important. And even if you study accounting in the future, or you happen to touch accounting subject in the future, these are always important. Okay, they always trick to students with many dates to make the questions complex. Okay, so answer is D. Okay, next question seems easier. Now let's see. A lot of numbers here. How much rent was payable for the year? For the year, they're asking you for the income statement amount, or you call it the transferring process amount. Transferring process amount. Okay, so let's do a rent account here. This is a typical question that you usually do. Very good. Year end is 31st December. Nice date. This is opening balance. How I know? Because that's the beginning of the year. CA or CL? Owing. So CL. CL indicates what? The balance PD should be on the credit side. Balance PD should be on the credit side. So 400 here. Balance PD. Okay, next one. Rent paid in year ended 31st December 2013. This is not closing balance, okay? For closing balance or opening balance, you have to have the preposition on or at, okay? You must have either on or at in front, okay? On that day, then only is opening or closing balance. And this 1,007, it says rent paid in year, okay? Amount you have actually paid during the year, meaning, so credit cash or bank, then debit rent account, 1,007 appears here. So knowing that the cash dash bank is on the other side, on the debit side, IS must be on the other side. This is the transferring process amount. Okay, the last figure that you have to find, this is the missing figure. Last one, rent paid in advance at 31st December 2013. At 31st December 2013. So this is closing balance. CA or CL, paid in advance. An expense that you have paid in advance. So it's a current asset because you have overpaid for it. Always be careful with the closing balance. Write the balance PD first. Meaning write it current asset, right? I told you. Okay. Write it here first. Balance PD 250. then only you move it up diagonally. Then you can find the missing figure. Easy, okay? Can find the missing figure. This is a very common question that you usually do. $1050. Answer is A. Okay, so one of you, I think you're asking whether how do I know we are looking at an income or an expense here, right? Is it something that you pay or receive, right? Easy. Look at the word here, paid. Okay, indicating that it's an expense. Indicating that it's an expense. That means we are the one who pays rent here. Okay, so owing means we owe somebody rent. Okay, because of the word paid here. If you have the word receive here, meaning you are looking at an income here. Everything will be the other way around. No, because it's written here the word paid. If okay, and you're asking how we know is us owing to somebody. Because of the word paid here, indicating that we are doing an expense here. If you are doing an income, you will have the word like receive, you will have words like rent receivable account, okay, rent receivable account, then only it indicates that it's an income. Here is an expense. And then here is also another word, rent account. Rent account is an expense. Okay, if you see the rent as an income, it's a different account. It's a rent receive account. But it's not the case here. Okay, so that's why answer is A. When you look at the question, it's from our point of view here, okay? It's from our point of view here, not somebody paid us. Okay, when we use the word pay here, it means we pay to somebody. Because the question doesn't say otherwise. Okay, I have to understand how to read the question. Okay, from time to time, you will understand. Okay, now you can see it's a question on another topic. Okay, because this paper is for covering chapter 6 all the way to chapter 10 of my materials. Okay, so we are done with all the questions for part 6 already, those accruals and prepayment topic. Now we look at depreciation. Scroll down further. Okay, here. Okay, they're asking you how much is the profit or loss on the sale of machine. They're asking you to calculate profit or loss on disposal. Remember how to find? Must remember, because almost always profit or loss on disposal, I mean, selling off NCA will always appear in the exam because it's something very popular. Have to find two amounts. Find net book value, find the proceeds, then you see which is greater. This is in your part 7, okay? In your part 7 materials. If net book value greater than proceed, it means that it's a loss on disposal. When the proceeds is greater than net book value, it's a profit on disposal. It's a profit on disposal. Okay, and how to find profit or loss on disposal? Easy. Take the bigger amount minus a smaller amount. Take the bigger amount minus a smaller amount. Meaning, if you are finding the loss, you take net book value minus the proceeds. If you are finding what? If you are finding profit, take the bigger figure, which is proceeds, minus the net book value. Sorry, this should be a minus here. Okay, so let's see how to find these two numbers. I can see that the proceeds is here. I know I should not read the second paragraph here. Paragraph first, but that's very obvious. So for something, so it is the proceeds here. 13300. Okay. Now find net book value. Must know what minus what for net book value. Otherwise, you cannot do this question. Cost minus accumulated depreciation. That's net book value. have to find these two amounts, cost minus accumulated depreciation. So how to find it? Look at the first paragraph. Started a business on 1st January 2017 and purchased a machine costing 1,008. Okay, it has been bought for 1,008. That's the cost. Let me write properly. Yeah, my handwriting is getting worse here. This is the cost. Price you pay to buy it. The price you pay to buy it, 1,008. He decided to depreciate the machine at 20% per annum using reducing balance method. Okay, they have even written a synonym here for you. Diminishing method means the same as reducing balance method. No depreciation was to be charged in the year of disposal. That means in the year in which you sell off the NCA, don't have to calculate depreciation. That's the meaning here. In this question, how many machines do you have? In this question, it appears that you only have one machine, right? Okay. How to do this question? You know the cost. Copy down the cost into here first. Down 18,000. And you have to minus accumulated depreciation, which we have to find now. So how many years depreciation should we charge? How many years depreciation should we charge? We have to see carefully the dates. We have to see the dates very carefully. They say Amric started business on this day, which means this is beginning of the year. Okay, when you start a business, will determine when is beginning of the year. So draw the timeline. Until the year end will be December 31st, 2017. Should we charge depreciation in this year? Yes, correct. Should charge, right? Okay. And then next year, January 2018 until December 31st, 2018. Should we charge depreciation in this year? Should we charge depreciation in this second year? No, because we sold the machine on 1st July 2018, which falls into the middle of second year. Okay, and then they say no depreciation was charged in the year of purchase. In the year you sell off the NCA, you don't charge depreciation. Agree? Okay, that means how much is your accumulated depreciation? It's only 1 year's depreciation here. The accumulated depreciation is 1 year's depreciation. Take 18,000 times 20%, you will get the accumulated depreciation. $3,006. So meaning here you put 3,006. Okay, can find the net book value right now? 18,000 minus 6,000 minus 3,006. 14400. Okay, so found the net book value, found the proceeds. Is it a profit or loss here? Crystal, have to look at the dates very, very carefully. There's something more tricky in the subject of accounting. You bought the machine on 1st January 2017. You sold it on 1st July 2018. Okay, started business on this day, meaning beginning of the year is this day. But did you sell off the machine in the first year? No. Agree? This is first year. This is second year. So in the first year, you have not sold off the machine, right? That means you charge depreciation at the year end, right? Okay. Second year, somewhere here, July 1st, 2018, you sold it off. So in this second year, you don't charge depreciation, right? So therefore, your accumulated depreciation is only 3,006, which is the first year's depreciation. You can understand? Okay, it's the dates problem. Have to look at the dates very carefully. If necessary, do whatever I've been doing with you, draw all the timelines, okay, so that you can see very easily, really, okay? So answer is, wait, I have not found the answer. Okay, let's calculate. Net book value is what? Net book value is 14400. Process is 13300. Is a loss here. So take 14400 minus the smaller number. Then see what you will get. 1100. Loss or profit? I don't think you have a choice here because there's only one option with 1100. So answer is A. Okay, so answer is A. This question, I would say that is with average level of difficulty. Okay, it's not the extreme difficult questions yet. Okay, so again, 10 seconds, and then I move on to the next question. Okay, we see the next question. Again, depreciation. How much was charged to the income statement for the year ended 31st July 2018 for depreciation on the motor vehicle? Are they asking you for the depreciation amount or accumulated depreciation? Okay, they are actually asking you for the depreciation amount for the current year. In this year, how much is the depreciation? Okay, have to be careful, yeah. When they ask for, if they ask you for accumulated depreciation, it's a different thing. They want the accumulated, okay, all the depreciation since the beginning. But here, they want you to find the depreciation for the current year, for the year. And the year end is 31st July 2018. Okay, not a very nice date here. So 12 months backwards, August 1st. Okay, write it down. I've not read this question, okay? I've not read other parts of the question here. But by writing this down, you can make the question maybe look easier, okay? When you deal with other other paragraph here. Arisa purchased a motor vehicle costing 23,000 on 1st August 2016. Is this a day in the current year, in the year that we are looking at? No, because it's 2016. Okay, 2016, yeah. She decided to depreciate motor vehicle using straight line method at 20% per annum. Okay. Depreciation on the motor vehicle of 4,600 was charged to the income statement for the year ended 31st July 2017. This is the previous year's depreciation. This is the previous year depreciation. You can check whether they have done it correctly. Agree? You take 23,000 times 20%. Will you get the 4,006? Yes. That means their calculation is okay. Okay, first year's depreciation, they have calculated it correctly, 4,006. Okay. And what about the depreciation for our accounting period here, which is the next year? It would also be the same because of straight line method. So answer is B. Answer is B. Okay. Looks confusing with so many words here, but they have actually given you the answer, 4,006. Answer is B. Oh, how I know it's previous year? Because I look at the question requirement, they're asking us for depreciation for the year ended 31st July 2018. This is current year. This is current year. How to know whether it's a current year? You look at the question requirement. This is current year. So how do I know this is previous year? Because it says for the year ended 31st July 2017. So very obvious here. Okay, have to be very careful with observing the dates. So answer is B because it is straight line method. Let me repeat, yeah. How to know which is current year, which is previous year. To look for the current year, look at the question requirement sentence. They're asking you for depreciation for the year ended 31st July 2018, meaning this is current year. You are looking for the depreciation for this period, current year. And in the second paragraph, they give you 4006 depreciation for the year ended 31st July 2017, meaning they have given you the depreciation for this period. Okay, which is the previous year. This is previous year. Okay, so answer is B. They have talked about so many things. Actually, the answer is B. Because it's straight line method, every year's depreciation is the same. Every year's depreciation is the same. Okay, so answer is B. Again, 10 seconds, then we move on to the next question. Okay, we see the next question. Okay, this time asking you for different kind of answer. They're asking you for the net book value. So recall what we know about net book value. Earlier we saw a question, right? Where we need the net book value. Take cost minus the accumulated depreciation. Again, always be careful with the date. They're asking you for net book value on 31st December 2017. 2017. Purchase equipment 28,000. That's the cost. The price you pay to buy the NCA is the cost. So 28,000 here. On 1st January 2016. Okay. Her depreciation policy is to use reducing balance method at 20% per annum. So we have to find the accumulated depreciation. We have to find the accumulated depreciation. Accumulated depreciation. So how many years depreciation should you calculate? How many years depreciation should you calculate? Okay, this question, they have not told us what is the year end or what is the beginning of the year at all. But since the dates given are nice looking, 31st December, here January 1st, I think we can assume that 31st December is the year end because it doesn't say otherwise. So you bought it on 1st January 2016. Year end is 31st December 2016. So this is the first year. Okay, first year you own the equipment. So you have to charge for the first year, right? Okay, and then second year, starting from 1st January 2017, all the way until December 31st, 2017. So you have to charge for the second year. Agree? So you have to find 2 years worth of depreciation. Then you sum them up, you put it here. Let me show you. First year depreciation is this 28,000 times 20%. 5600. Okay, reducing balance method, first year's formula. Second year depreciation. This is second year's depreciation. Okay. So we have found the accumulated depreciation. Accumulated depreciation is these two amounts together. Okay, because they are asking you for the net book value at the end of 2017. So you should have charged depreciation for 2 years already since the day you bought it. Okay, you should have charged the depreciation for 2 years already since the day you bought it. So sum this up, you will get the accumulated depreciation. $5600 plus 4480, 10080. So net book value, you take 28,000 minus 10080. Answer is D. Okay, so not that difficult for this question. Just have to be careful with the date. You must know how to calculate the accumulated depreciation. Okay, after that, we see the next question. Okay, everyone seems fine. We see the next question. Which book or prime entry was used to transfer 300 to the income statement, and how it is, how was it treated there? How was it treated there? Okay, it's asking you how to bring the 300 to the income statement. Which book or prime entry do you use? They're asking you, which book or prime entry do you use? So you can see this is a disposal account. Anybody can tell me, is this profit or loss on disposal? Okay, so you answer me, profit or loss in the box there. Okay, is the 300 a profit or loss? Okay, good. Answer is a loss, because that's what you have in your notes. Part 7. Oh yeah, still opening. Okay, if the last figure you get is on the credit side, it's a loss. Okay, the IS written on the credit side. If you get the IS written on the debit side, it's a profit. Okay, you can use the usual method. Get the net book value, get the proceeds, you will get the same result. Okay, it's a loss. Okay, when the IS is on the credit side, it's a loss. So it's a loss. Okay. Now, this is about bringing the loss to the income statement. Okay, loss of disposal of NCA, loss of disposal of machinery. Which book or prime entry should we use? Answer is general journal. And it cannot be sales journal, because the purpose of sales journal, you must remember, is to record sell goods on credit. Is to record sell goods on credit. Whenever you sell goods on credit, you record into the sales journal. But you are selling off NCA right here. Okay, you are selling off NCA right here. You are recognizing the loss on disposal of NCA. So it's not recorded in sales journal. Sales journal function is used to record selling goods on credit only. Why general journal though? So there are 7 books of prime entry. You remember? There are 7 books of prime entry. Sale journal, sale return journal. All these names must remember. Purchase journal, purchase return journal, petty cash book, lastly general journal. 7 books of prime entry. 1, 2, 3, 4, 5, 6, 7. You can see the general journal as the last dustbin in the recycling activities. Last dustbin in the recycling activities. What do I mean? Because if you look at the notes, function of general journal is used to record transactions that cannot be recorded into other books of prime entry. Okay, general journal function is used to record transactions that cannot be recorded in other books of prime entry based on their functions. So basically, general journal, the role of general journal is to cover or record all those transactions that are not accepted by other books of prime entry. That's why I call this as the last dustbin in the recycling activities. In recycling activities, you know, right? You have a lot of dustbins. You have the dustbin for the papers. You have the dustbin for the aluminum can. You have the dustbin for recycling. What else? Glasses. You also have the dustbin for recycling Papers, aluminum, glasses. What else? Plastics. The more advanced dustbin, the electronic goods dustbin. Okay, electronic goods can also be recycled. Okay, and the last dustbin is the rubbish. Anything that cannot be recycled, you put it into the last dustbin. Okay, because it's not recyclable, we call it as rubbish. So see the general journal as the last dustbin. I think it's a very good comparison here. Okay, very good analogy here, easy to understand. Because it accepts other transactions that are not acceptable by other board of parametry. So general journal is a loss. That's why answer is A. Okay, so answer is A. Okay, 10 seconds. Then I move on to the next question. Let me drink some water. Okay, if you have anything to ask, you ask. Okay, before I move on to the next one. Okay, we see the next question. Still have half an hour to go. We see the next question. Hope we can finish this today. Okay, this one. What was the accumulated depreciation at the end of the year? They're asking you for accumulated depreciation, meaning all the depreciation you have charged, all the depreciation you have calculated since the day you own the NCA, up until today. Provided following info about a non-current asset. Cost is this amount, meaning you bought it for 12,000. Okay, cost is the price you paid to buy it. Accumulated depreciation at the start of the year, 1,008. What does this amount represent? This amount represents all the depreciation you have charged in the earlier years. All the earlier years depreciation. All the earlier years depreciation. Okay, 1,008. Okay, now, has the 1,008 included current year's depreciation? Has the 1,008 included current year's depreciation? Not yet, because we always calculate depreciation at the year end. So current year's depreciation is not included in the 1,008 yet. It's not included in the 1,008 yet. So you are going to take the 1,008 plus the current year depreciation, then you can get the answer. Okay, now calculate current year's depreciation. I think it's very easy here. Reducing balance method, 15%, take 12,000 minus 1,008 times 15%, then you can get the current year's depreciation. Then you add it to here. $1,530. So what is accumulated depreciation at the year end? These two amounts together. 3,330. Okay, good, Crystal. Yeah, your answer is correct. Okay, again, 10 seconds, then move on to the next question. This is considered not that difficult. Yeah. Okay, I see a question here. Yeah, Ishin, you ask. Okay, so you're asking how can the 1,008 be all earlier years depreciation? Because it says at the start of the year, your accumulated depreciation is 1,008. I know you are trying to understand how they get the 1,008, right? Okay, so if you try to take 12,000 times 15%, see what you will get. Yeah, you get 1,008. That's the first year's depreciation. So referring to earlier year's depreciation. That means this NCA, they bought it last year. So last year, they also charged depreciation, right? So that's the 1,008, which refers to earlier year's depreciation, which is just the previous year. That's the earlier depreciation, 1,008. Yeah, it's the first year. Then I remove this earlier years, only 1 year. Okay, earlier years depreciation. Yeah, correct. That's only for the first year. Okay, so B, answer is B. Now you see the next one. The second year's depreciation is this 1530. And at the year end, they ask you to find accumulated depreciation, not just depreciation amount. So together with the first year depreciation is altogether 3330. That's why the answer is B. How do I know that I have to sum up these two figures? Because of the word accumulated. Accumulated means all the depreciation since the beginning until now. Let me explain to you again what is accumulated depreciation. This is how it works. Let's say you have a depreciation column here, and then another column, accumulated depreciation. So year 1, year 2, year 3. Year 1 means the year in which you bought it. Depreciation amount is 1,008. So after you have charged depreciation for the first year, how much would be your accumulated depreciation? Of course, it's just first year because you have charged for only 1 year. So accumulated depreciation is the same as the first year depreciation. Second year, depreciation is how much? 1530. So how much have you accumulated at the end of second year? Of course, first and second years together, 3230. If you want to work on the third year, then you find third year's depreciation. 12,000 minus 1,008 minus 1530 times 20%. 1734. So depreciation for the third year is 1734. If they ask you for accumulated depreciation, what is the figure? It's the combination of the three figures. 5064. 5064. You get the idea? Ishin? Can understand? They're asking you for accumulated. Okay, not the current year's depreciation. What exactly is your question? Oh, how I know we stopped at the second year? Because hold on, yeah. How do we know that we have to stop at the second year? Because we are looking at the current year. This is current year. Okay, it's asking you at the year end, how much is the accumulated depreciation? And it says at the start of the year is 1,008. That's why I know that we are doing the second year. That's why we know that we are doing the second year's answers. So we are looking for the accumulated depreciation at the end of the current year. Current year is the second year. Based on this. The year. the year. Okay, the year. Okay, so it's not about the third year, it's not about the fourth year. Unless they change it at the end of the at the end of the later years, following year and so on. But it says the year, means the current year. Okay, I think it's about your understanding of the phrasing of the question here. Okay, have to understand the timeline very well here. We are looking at the current year, okay, which is the second year. Okay, yeah. Okay, now next question. Hold on, let me press the charging button. Next question is about the revaluation method. Revaluation method. There are three methods of depreciation: straight line, rotating balance method, and also the revaluation method. This one is easy. Everyone, you give me your choice of answer. Then I'll let you know whether it's right or wrong. For this question, okay, this one. Yeah, correct, Crystal. Well done. Easy. Okay, I wait for the rest. Good, Kelly. Easy, right? Yeah, good, Shamin. Answer is C. Okay, sorry, I've told all of you the answer. Answer is C. Okay, let's take the value at the beginning of the year plus amount you have purchased during the year minus the market value at the year end. Okay, that's very easy. Revaluation method. How do I know it's revaluation method? Look at the term here at valuation. It's super important when it comes to doing the paper 2 questions. When they give you this term at valuation, it indicates that you are doing revaluation method. They won't tell you with the term revaluation method at all. I've never seen exam questions telling you with the term revaluation method. You have to be aware yourself by looking for the key terms. At valuation means revaluation method. Okay, sometimes they don't give you this either. They don't give you this, but they will give you some other hints, like give you the market value at the beginning, give you market value at the year end, which indicates is a revaluation method. Okay, which indicates is revaluation method when they give you market value at the beginning and at the year end. Okay, very soon we will see some questions for sure. Next question is what you did before in part 7. It's the same question that you saw in part 7. Answer is D. Spread the cost of the NCA over its useful life. Okay, spread the cost of the NCA over its useful life. Okay, so these two are quite simple. We see the next one. This one, you have to remember what are the tab entries for charging depreciation. So be aware of these two accounts, NCA account and the accumulated depreciation account, which is also known as the provision for depreciation, right? Provision for depreciation means the same as accumulated depreciation. Have to know where's the plus and minus, then you will not make a mistake here. Plus is here, plus is here, minus is here, minus is here. This account is meant for you to record depreciation. So whenever you have calculated depreciation, you will credit this account. You will credit this account. Therefore, answer is, I don't think you have a choice here. Answer is B. Credit provision for depreciation account, then debit income statement. Debit income statement means you show it as an expense in the income statement. That means in the income statement, in the expense section, you will have depreciation of the equipment, depreciation of equipment, 200. Okay, that's what debiting income statement means. Show it as an expense in the income statement. Okay, credit provision for depreciation means showing the entry here. Okay, so this is also straightforward. The rest are incorrect. The rest are incorrect. Ignore them. Okay, after that, we see the next question. Next question is about doubtful debts. Doubtful debts. Let's see. Which journal entry record transfer to the income statement? When you are looking at questions for doubtful debts, the amount that goes into the income statement is either the increase or drop in dark full depth. Okay, the amount that goes to the income statement is always the increase or drop in dark full depth. Okay, it's the increase or drop in dark full depth. So have to find out what is the drop or increase. Maintain dark full depth at 2% of trade receivable. On 1st January 2018, provision was 200. This means the dark full depth at the beginning of the year is 200. Okay, that's the word provision means. At the year end, have they given you the dark full depth at the year end? Not yet. You have to find it yourself. Take 12,000 times 2%, then you will get the dark full depth at the year end. Then you will have two amounts of dark full depths. Then you will know whether there's been an increase or drop in dark full depth. 240. Has there been an increase or drop? Very obvious here. It is $40 increase. $40 increase. For sure, answer is not B. Answer is not D. Because you need the $40 here. Okay. Which one? A or C? Okay, you have learned this in part 8. You have learned this in part 8, A or C, everyone? Okay, you let me know in the box there. If not sure, please refer to part 8 and then you come back here and tell me, okay, in the chat box, A or C. It's quite a straightforward question here. Okay, I wait for the rest to answer. Okay, 2 of you got it wrong, 2 of you got it right. I wait for Crystal. Okay, let me review. Okay, 3 of you got it right, 2 of you got it wrong. Probably you have forgotten how does the provision for the full depth account look like. You have to understand where's the plus and minus in a provision for the full depth account as well. Just like you have to understand where's the plus and minus in a provision for depreciation account. It is, hold on, yeah. I didn't show you through here. Let me show you. Hold on, yeah. I can let you see this. Okay, when there's been an increase, you do this double entry. Credit PDD account, debit income statement. If there's been a decrease, it's the other way around. Debit PDD, credit income statement. Because in the PDD account, provision for doubtful debts, the credit side you have a plus there, debit side you have the minus there. So when there's been an increase, you credit PDD account always. So answer is A. Answer is A for this. I don't have much explanation for this because that's a fact. Okay, in the provision for doubtful debts account, plus is here, minus is here. Okay, just like provision for depreciation account. Therefore, if there's been an increase, you will credit here, then here you will write IS. Okay, therefore answer is A. What if there's been a drop? Answer will be C instead. Okay, if there's been a drop, answer will be C instead. Okay, so have to wash up. This is quite a popular question in the exam. Have to know where is the plus and minus, then you can answer easily. Okay, we see the next one. Okay, sounds confusing, but don't worry, let's see. What entries did Alan make on 1st June? Okay, that means we are Alan. When the question is asking you how somebody should record something, you are that somebody. Hannah O. Allen 1008. Who is Hannah to us? What do you think? Must be our customer. Because logically, customer owe supplier money, right? Okay, so we are Alan here. Hannah owes us money. Hannah paid 1,003, then still owe 500, right? Still owe 500. Remaining balance was written off. Have to understand the term written off. Otherwise, you cannot do this question. Written off means record it as irrecoverable debt. Record it as irrecoverable debt. Okay, so how do you record the irrecoverable debt? Hold on. Let's see what they ask us to do first. On 1st June, how should Alan record? How should Alan record? So receive 1,003, right? Receive 1,003. Okay, so debit bank 1,003, agree? I know it doesn't tell you whether it's cash or check here, but do you have any other options? No, right? You're not given cash account here. Answer is either A or B. Okay, now continue to see. Remember the tab entries for recording irrecoverable debts. First step is about removal, the removal of customer account, writing off. You credit customer account, debit irrecoverable debt account, which is in your part 8, okay? It's in your part 8 first page. So credit Hannah, debit bad debt. Bad debt means irrecoverable debt. Answer is A. Okay, so quite a straightforward one here as well. Okay, 10 seconds, then I move on to the next question. Okay, next one. Here again, testing you on the tab entries for provision for the food debts. I let all of you try this time. I think this is not difficult here. Okay, quite similar to what you did, the one that I discussed with you 2 questions earlier. Okay, you do this and then you tell me A, B, C, or D. If you have not done, okay, if you have done it, you can tell me the answer straight away. Then I discuss with you. Okay, Kelly, for sure you have done. You did it many months ago. Okay, because you're a private candidate. Okay, I wait for the rest. Oh, Crystal, this question answer is A. Okay, previous question answer is A. Debit bank, debit bad debt, credit Hannah. Wait. I didn't look at the numbers carefully. Oh, it's correct. Answer is A. Answer is A. No problem. Okay, so the rest I wait for your answer for this one. Should be an easy one. Should set the timer, otherwise I will wait forever. 1 minute left. Okay, time's up. Sorry, I've been to the washroom just now. So boy, a donkey. Okay, two of you choose A, one of you choose B, one of you choose D. Okay, and then so that means 3A, 1B, 1D. Let's see how I solve it. First and foremost, this question, they have not given us any Dafudat amount. They have not given us any Dafudat amount. They ask you to find yourself because trade receivable is given, trade receivables is given. This is beginning of the year. This is the year end. I know they have 31st August here. You can consider this as 1st September 2017, okay, because it's just the next day. Then find out for that amount times 3% times 3%, 70,000 times 3%, 2001, 2190. Has there been an increase or drop in the food? Increase, right? Up by 90, up by 90. So answer is A. Answer is A. Because credit provision for the tax account, debit income statement. Okay, it is the increment or drop that would become the double increase. Okay, so it's 90. Why C is not the answer? Because C is the other way around. C means a drop. C for option C, it means a drop. And then answer cannot be B, answer cannot be D. Because the amount that you should use for the double increase is the increment or drop. Okay, not the year end or the beginning of the year. Okay, next one. We do two more. Which entries will Ahmed make? Ahmed, we are Ahmed here. Decided to write off an amount owing from Yasmin as a bad debt. Yasmin must be Ahmed's customer. Write off means irrecoverable debt. So remember the two steps that I told you about the irrecoverable debts? They have exactly the two steps here. So cancel off the trade receivable, credit customer, debit irrecoverable debts. Next, transferring process. You credit irrecoverable debt, debit income statement. So answer, when the debt is written off, credit Yasmin, debit bad debt. And at the year end, do transferring process, credit bad debt, debit income statement. Answer is A. Okay, quite a straightforward one here. Unless you have forgotten that there are two steps, then you would have missed for this question. Okay, so answer is A, quite obvious here. Okay, we see the next question. Which entry is made to record this decides to change his provision for doubtful debts from 2 to 3% of trade receivables? Honestly speaking, this is not a good question. When the percentage has been changed, it doesn't mean that doubtful debts will drop. It depends on how much trade receivables you have as well. So let's say at the beginning of the year, your trade receivable is maybe 20,000. Okay. Okay. At the year end, the trade receivable is maybe 400,000. A big difference. Okay, I know. But I just want to demo to you. Hold on. Let me change. I have to reposition them. Let's change the figure. My point is, when you see this 2 to 3%, it means an increase in doubtful debt, right? It looks like an increase in doubtful debt, but it's not true observing the percentage to determine if there's been an increase or drop. You have to see the doubtful debts amount. So let's say the trade receivable at the beginning is 400,000, and the year-end trade receivables is 20,000. So go on and calculate doubtful debt times 2% times 3%. How much will you get for the food? 400,000 times 2%, 8,000. 20,000 times 3%, 600. Okay, these are the food apps amount. Okay, these are the food apps amount. So what can you observe? After you have calculated the food app, there's been a drop. There's been a drop in the food app. That's why you cannot see whether there's been an increase or drop in that food app by just looking at the change in percentage. Okay, you cannot just look at the change in percentage. Therefore, to be honest with you, this question is an invalid question. Okay, they would choose the answer as C. They would choose it as C based on observing the percentage alone. But I don't think it's a good question because you have to see what is the food app amount. Yeah, unless trade receivables stay the same, then answer will be C. Or why C? Okay, this is what I taught you. Why C? Increase. Nothing changes. The percentage has changed, right? 2% to 3%. It has changed. It has increased. So answer is C. Because there's been some change. The food app rate has increased 2% to 3%. So answer is C. Increase in that food app. So credit PDD account, debit income statement. That's why it's C. Just now, I was explaining with the trade receivables amount along with the food apps amount to show to you that this is not a good question. Okay, but anyway, I have to tell you the answer, right? They observe the percentages. There's been an increase in percentage rate for the food app. So it's an increase in provision for the food app. So they decided that the answer is C. The working here is for me to show to you that the question is not a good question. The question show to you the percentage has increased to tell people that the food app has increased. I tell you that it's wrong. I tell you that by observing the percentage, it is not a sure thing to tell that there's been an increase in the food app. We have to also look at trade receivables amount, 400,000. Let's say, okay, maybe trade receivables at the beginning 400,000, at the year end trade receivable 20,000. Multiply with the percentages, you can see that the food app has dropped, right? So I'm just trying to demo to you by just looking at percentages, you cannot really see the food app has increased or dropped. You get the idea? And that's why it's a bad question. It's a bad question set by examiner. But anyway, we have to answer. Just answer the way they want. They want you to observe the percentage. There's been an increase. That's why answer is C. I can also show you other figures for trade receivable to show that the food app has increased. Let's say trade receivable at the beginning. Trade receivable at the beginning maybe 600, maybe 6,000. Maybe at the year end, trade receivables is 400,000. So times 2% times 3%. 120 food app. At the year end, 12,000 food app. You see? Food app has increased. So my point is to see whether food app has really increased or dropped, you don't look at percentages. You look at the actual amounts. Look at the trade receivables, calculate the food app, then only you can see whether there's been a drop or increase. But this question is a bad question. They just show you the percentages, which is not enough. But anyway, in the exam hall, you must answer, right? That's why answer is C. You get the idea, Yishin? Can understand? Okay, yeah. So I think that's it for today. Next week, we will continue with for sure we can finish off this part, this paper 1 next week, and then moving on to the paper 2 for part 6 to 10. Okay, everyone have a nice day. I will see you next week at the same time. Bye. Welcome everyone. Okay.